All right. So we begin after a lovely lunch and re-energizing ourselves mentally and physically as well, inshallah. We begin the very last session for this 2 days event that was hosted by AOPI and Islamic Development Bank, the 19th Annual Islamic Banking and Finance Conference 2024 in Manama, the beautiful kingdom of Bahrain. Session 7 again hosts and holds another very important theme. It states leveraging participatory financing for sustainable economic development, governance and accounting challenges. It's a very full-on session that is actually hitting 4 or 5 targets in one go. And to do so, may I have the pleasure of inviting first the session chairman. Our session chairman is Mr. Ayad Asli. Mr. Ayad Asli, if you can grace the occasion. Mr. Ayad Asli is the General Manager in Islamic International Arab Bank, Jordan. What a great country Jordan is. We welcome you, Mr. Ayad. With the chairman all set, may I now move towards inviting the speakers for this great panel, the concluding panel that is going to discuss leveraging participating financing for sustainable economic development, governance and accounting challenges. First up is Professor Dr. Najmuddin. Professor Dr. Najmuddin, please join us on the stage. Professor Najmuddin is professor in Istanbul University, Turkey, another great country. Next up is Mr. Muhammad Farhanul Haq Osmani. Muhammad Farhanul Haq Osmani, please grace the occasion by sharing the stage with all learned speakers. Farhanul Haq Osmani is the Executive Vice President and Head of Sharia Audit, Mizan Bank Limited, Pakistan, a great bank, on top of it coming from another great country. Last but not the least of the speakers who are going to discuss this concluding session is Mr. Rafiuddin Shikho, if I'm pronouncing it right. Mr. Rafiuddin Shikho. Tafadal. Mr. Rafiuddin is the CEO and Managing Director of Dinar Standards, United States of America, another important country. So you have United States, you have Pakistan, you have Turkey, you have Jordan, a 4-in-1 strong panel discussing a very strong and a power-packed punching topic to conclude the Nobel Conference. All yours.
Excuse me? بسم الله الرحمن الرحيم الحمد لله رب العالمين وأصلي وأسلم على سيدنا محمد وعلى آله وصحبه أجمعين. Thank you very much for the introduction. To admit it's extremely difficult to address the public who are chose to listen after the lunch and keep them awake because as you know, lunch timing and everybody will be a little bit feeling relaxed. But I feel that the subject we're going to address could drive some light into the discussion and make it more energizing and more stimulating. When we talk about sustainability, when you say participatory financing, you're talking about Islamic banks basically. Because maybe in some countries, like in Turkey, they call it participation banking. They don't call it Islamic banking. So in other countries, they call it Islamic banking. But in the end, Islamic banking is participatory financing. And we claim all the time that Islamic banking is really a major contributor to sustainability. If we go back to 430 years back when Islam started, when the Prophet ﷺ came to the humanity with Islam, we claimed, and we still claim, Maqasid al-Sharia was based on sustainability. when you talk about Islam, you talk about sustainability. Because it was all about إعمار الأرض. مقاصد الشريعة stems from the very fact of improving, governing, building the land space where humans, species, animals, germs, you name it, are there. So we started with this motto and this doctrine 1,430 plus, 40 plus years back. Now, everybody is talking about sustainability. Yeah, the United Nations have introduced the SDGs, which are the 17 sustainability goals of the United Nations. And the ESGs, which is the talk of the town nowadays, is nothing but including the governance and the environment and the social development into the very map of what will be the goal of the United Nations going forward. So when we claim that Islamic banking is sustainability driven, we have to prove it. We have to make sure that we have the means to go towards that direction. One of our colleagues in the previous panel said, what is the value proposition for Islamic banking? I can claim that Islamic banking, if it only goes in line with Islam, the value proposition is immense. It goes in line with sustainability. Real economy as opposed to subprimes and Mudarabat and gambling and you name it. I'm not trying to compare here, but Islamic banking is all about sustainability. When you talk about sustainability, you have to talk about products and services that can drive Islamic banking into the avenues it reaches, to make it better for humans to live, to make poverty less, to make women more equally treated, to have products and services towards the clean energy, to have products and services safeguarding the interest of poor and make them less poor and make poverty something less of a problem. Clean energy, water, those are all sustainability goals. What have we done in Islamic banking to promote them away from just making money for owners of the organizations and making money for people who are already rich to make them more rich? This is all about sustainability. To do that, you have to have the proper governance framework, you have to have the proper accounting treatments, and you have to have the technology. I can claim that in the Islamic International Arab Bank, which I happen to manage, we have addressed at least 12 out of the 17 SDGs, and we have products and services that cater to 12 out of the 17 goals of the United Nations sustainability goals. We have products for the poverty alleviation, we have products for women empowerment, we have products for clean energy, we have products for better movement towards a more socially stable environment, and so on and so forth. I don't want to take more time. We are very interested in listening to our very esteemed panelists who have their contributions to that effect. We start with Professor Najmuddin Kazilkaya, who is the professor of Islamic banking in the University of Istanbul, who has a short presentation, and he wants to give us his insights regarding this important issue. Thank you. Please, the floor is yours, Professor.
Okay. Thank you very much. Bismillah ar-Rahman ar-Rahim. Alhamdulillah wa salatu wa salam ala Rasulillah. Thank you very much, Mr. Chairman. Let me start to thank the organizer of this excellent conference, AOPI, and also Islamic Development Bank. So I will briefly touch upon two aspects of Islamic governance. I think without one of these, the other one is not impossible and the existent. We cannot talk about the existing of the other one. So, sorry. Oh, sorry. Okay. Yeah. I mean, I will briefly share my thought with you about the ethical dimension, the ethical aspect of Islamic governance, and especially will focus on the past experience of Muslim communities and the knowledge that was produced by scholars in the past, and then I will, share my opinion about the theoretical dimension of this, the moral issues of governance. I'm not sure, but maybe, it might be very theoretical, so I won't, touch upon the problem of the industry and the current issues in the industry, but as an academic, I will just touch upon the theoretical issues related to the governance, Islamic governance. It might be, impractical for some or very idealistic, but as an academic, I think it is my obligation to do this. So, the basic principles of governance are usually considered in their regulatory dimension. This is not only a fundamental issue for today, but also for the past and for the past Islamic governments and societies as well. And the historical experience of Muslims in this regard dates back to the Prophet Muhammad alayhi salam. So as a matter of fact, he himself, carried out the Hisbah operations while he was alive. After his demise, as you know, the Hisbah was, the operation of Hisbah was carried out by the four caliphs, and after them by the scholars or some administrative staff in the later period. So here the question, what does it mean for us that the historical origins of the institution of Hisbah date back to such an early period, to the life of the Prophet himself, and that it has been an active institution for centuries, and that there is a vast, Hisbah literature that was produced by scholars. That is, I mean, I took Hisbah as an example, but this question for me as an academic is very crucial. And what does the existence of this institution mean for us beyond, saying that Muslims also established good institutions in the past? So, I mean, I will not talk about the history of Hisbah or its principles and how it was functioning, but I will, touch upon like a few points in terms within the framework of governance. So, Hisbah is, closely related to human nature. That is, I mean, it is the human nature to do, wrong and deviate from the right path. So that's why the prophets were sent, and that's why there are some regulations, and that's why we need some, regulative issues taken by, a government. So, and it is also necessary for human beings to be supervised from the outside by an authority, and we need an authority for such things. And I think for this reason, various control mechanisms were established in the past as well as today. And this aspect of human nature was tried to be controlled. So that's, I think, one of the main point in terms of the governance. And this was considered so important that the Prophet ﷺ himself checked the market, and he made recommendations to solve some issues or some problems he encountered right there and then. So his recommendations, and now we are using his recommendations in ethics, in governance, in other aspects of Islamic financial institutions. So of course we take his recommendations to people who were active in the market as a hadith now. So I mean, one example I want to mention one example which is very important, I think, a very famous hadith. Man ghashana falaysa minna, right? Minna. So the Prophet ﷺ, he also checked the market, and he see that there is he put his hand in a pile of grain that was sold in market, and found it damp and from inside. And then he asked the owner of the grain. He said, "What is that?" The owner of grain said, "The rain caught it, the messenger of Allah." He said, "Why did you not put it on top of the heap so that people can see it?" So, and then the hadith that we always quote and we always mention comes: anyone who cheats us is not one of us. Man ghashana falaysa minna. So, I mean, this hadith goes back to the hisbah of that the Prophet ﷺ himself, the institution of hisbah that he himself took role. So, I mean, this example shows us the second aspect of governance. This is I think the morality that we as Muslims talk about at the level of discourse, but have lost in practice. So, I mean, ethic or morality is important. We always give emphasis on it, but in practice, in the level of implementation, I think we lost this in our personal life and institutional level. And morality is the most fundamental principle of governance, especially when we are talking about the Islamic governance. And we always, talk about Sharia part of governance, but I think the morality is one of the common point for Sharia scholars and for the practitioners in the industry. So that's why it is, I think, one of the existential feature of Islamic governance and also Islamic ecosystem. I think without morality, external oversight will be incomplete. If we talk about the governance in Islamic institutions. So I will briefly touch upon two important dimensions, the qualities of morality. The first one is the internal control aspect of morality, or we can say self-control of morality. And it is, of course, moral values or morality is about the inner world, or the inner dimension of the human being. And if this is not in order, there is no need for, if it is in order, there is no need to, control or the outside control of institutions. And if there is the morality in, the inner morality or self-control of morality. And it is, of course, morality creates an internal control or self-control of mechanism. So I think the concepts such as justice, accountability, fairness, transparency, trust, business discipline are all related to morality. I mean, in the Muslim world or in Islamic institutions, we are always complaining about the lack of such concepts. But these are all related to moral values and morality. So that's why we should go back and we should go back to the fundamental issue. What is missed and what is wrong with our inner world. So I think I don't want to go into detail, but unfortunately today the utilitarian ethics is shape our moral values or moral worth, and the moral philosophy developed by some scholars such as Razi, Farabi, Ibn Miskawayh, Ghazali, and Tusi, and some others. They say nothing to us. They say nothing to us. Especially it starts from the early education up until the after graduation. So all the education is based on such utilitarian morality. For a year now, we have been painfully watching how this utilitarian morality has dragged the world into a deadlock. So we all know this. And the second domain, I'm coming to the conclusion. The second aspect or the second domain in which morality is linked to governance is social control. And in a society of individuals with self-control, moral governance develops through intra-social mechanism. So the historical experience of Muslim societies, is full of many examples of such institutions. Like many institutions were established by Muslim in the course of time, and these institutions, especially, on the one hand, regulated the functioning of the certain sectors or market, and on the other hand, they provided a moral supervision within these sectors. I think this is something that is missing today. We don't have such mechanisms. So regulation is maybe like we have full regulation, but how about the institutions that are focusing on the supervision within the sector and moral values within the sector. In such professional institutions in Muslim societies were not only limited to increasing the market and market share of a sector or develop its development, but also they set principles. They set principles for the moral maturation of the individuals. Okay, that's I think important. So I think today we are distant from both these institutions and principles of the Islamic past, and do not think about how adopt their principles to the present. And in conclusion, so when it comes to the basic principles of governance, we need a look at the historical, we need strictly, very seriously to look at the historical experience of Muslim societies. And the historical experience and principles of their functioning should be analyzed as concrete examples. But I'm not talking about like just saying, oh, we had this, we had that. To focus on the principles, how they were functioning, and we should take them as concrete examples. And also we need to talk about how these principles can be adapted to Islamic ecosystem, Islamic institutions, Islamic financial institutions, which is a global actor today, and we need to come up with solutions for ourselves and for others as well. If we don't do this, we will have to follow the solutions that others have created and grapple with the problems that it, I think, creates. Thank you very much, Mr. Chairman.
Thank you, Professor Najmuddin. I think it was a nice start to start from the outset of Islam when he spoke about Hisbah and then he spoke about how to look at governance in the light of the Islamic principles. This takes us to another speaker, who is Mr. Muhammad Farhan Al-Haq Uthmani, who is from the Sharia Committee of the Mizan Bank. And I'm sure you will give us some insight about the contemporary, if you may, challenges that might be facing the governance and issues relating to sustainability. Because our Professor Najmuddin spoke about Islam, the Awsat, Hisba, and all this, and it's, of course, it is the cornerstone of the Islamic religion. But if to put things in practical notice, because I spoke to him before, because he's a professor, he's talking mainly about theory. Maybe being in a bank will make you in a position to test how governance was put into testing and upon implementation with the experience of Islamic Bank in Pakistan, which is the biggest, basically, Mizan Bank. Thank you.
Bismillah ar-Rahman ar-Rahim. Nahmadu wa nusalli ala Rasulihil Kareem. Firstly, I would like to thank AOPI for having me here, and especially the audience, because it's quite challenging to be here, especially after such a lavish lunch on day 2. So thank you very much for being here and being awake. The important topic in the discussion that we are having right now is about the role of participatory modes in the development and growth of a financial system, and besides that, how we can achieve maqasid al-Sharia through the use of these participatory modes. I'm being asked to present a product which is very famous and popular, especially in Pakistan, and that product is called Running Musharakah, to the audience today. But prior to presenting the operational and practical aspects of this product, I would like to mention and discuss, based on my experience, the philosophy of use of participatory modes of finance in a banking system or overall Islamic economic system. Firstly, I believe we all are and should be very clear that the benefits of an economic system should come from an economic system, and economic system is a bigger connotation as compared to a banking system. Banking system is part of a bigger picture, which is an economic system, and it is there merely to facilitate distribution rather than doing the distribution of wealth in itself. So we need to understand that banking technically means channelization of money. And this process of channelization of money, when being done in a Sharia compliant manner, this institution is called an Islamic financial institution or Islamic bank. Now, having said this, in order to reap the benefits of a Sharia compliant modes, procedures in the economy, we need to have the modes, we need to have the mechanism for an Islamic economic system rather than just the banking system. Because a banking system is here, on one hand, it accepts the funds from those individuals and institutions that have excess liquidity and they want to place it or they want to invest it. While on the other hand, they pass it on to other institutions or individuals who have the opportunity to utilize, invest, and make use of that excess liquidity. And then, if they generate profit out of it, they can distribute. In conventional side, they usually have just 2 products, that is, borrowing on the basis of interest and then lending on the basis of interest. While in an Islamic bank, what they do is, they usually accept fund on a participatory mode. And on the other hand, they usually use 3 kind of modes. The first one is the trading mode, whereby they trade with the customers and they generate profit out of it. Secondly, they give products, equipments, machinery, plants on rent to generate rental income. And third one is the participatory mode. So that's the operational difference. But the the basic function of an Islamic bank is to channelize money. So from that perspective, we need to understand that this is just one product of participatory modes usually used on the asset side to facilitate. Now, as a first step, this participatory mode is being used at the initial level to distribute the profit out of the profit being made by the customer, and subsequently, this is the beginning, and subsequently we expect that the profit will be shared at further and a deeper level as is being done, usually on the liability side. Musharakah as a key instrument in Islamic finance, and the core concept, as we all know, is a partnership-based financing model where Islamic financial institutions share in both profits as well as losses with the client, fostering a risk-sharing ethical framework. But besides that, there are certain challenges, as is the case with usually risk-sharing products, because the perception that the general public, with regards to banking, is that banking, by placing funds with the bank, it means they're risk-free. Technically, so we need to understand that, when entering into a participatory mode, there are some inherent risk and also certain other challenges like legal and regulatory barriers. There are certain barriers because usually the regulations, the laws related to banking industry are being made, keeping in mind that a bank is an institution that guarantees not just the profit, but the principal as well. So of course, one needs to face these kind of impediments and challenges. On the other hand, undocumented business sectors, especially in the developing economies that we face, we do not have very structured financial system there that can offer the exact scenario as to what is being done at the organization. Thirdly, there are operational complexities. Managing Musharakah-based products is complex due to diverse customers, business practices, and inconsistent financial records maintained at the institutions. Another important area is the profit and loss allocation, and accurately tracking and going into the operational details is quite challenging. Revenue recognition, recognizing revenue on a gross and net profit basis depending upon the nature of the sharing that we as a bank and customer agreed is quite challenging. And lastly, asset valuation, because if you are entering in a partnership with any institution, then of course, whatever assets are being bought in the partnership, in the Musharakah, that needs to be valued regularly, and its impact should be taken while distributing profits. As far as implementation of true participatory modes are concerned, we need to understand that we need to have a phase-wise approach to implementing Musharakah. For instance, at first, we need to begin by partnering on a gross level rather than going into a deeper level of profit sharing. That is relatively quite easier to calculate and understanding for the customers. And secondly, subsequent to that, there should be a transition whereby the profit sharing can be done at a net profit level. Running Musharakah product will enable the customer to draw and deposit funds against a running Musharakah finance limit offered by the bank as an alternative to running finance facility. Now, this is another important area whereby usually the customers, especially the corporates who are into the manufacturing or trading business, they are in need of liquidity and funds on a regular basis, but they do not know how much money will they be needing and at what point in time. So usually they look for a product like a running finance whereby a limit is being provided to them, and as and when they are in need of liquidity, they can ask for the bank to provide that liquidity, and as and when they want, they can return that money back to the bank. So in running Musharakah, the bank enters into a Musharakah with the customers based on the concept of Shirkatul Aqd, and then subsequently bank and the customers will invest in the identified primary operating activity of the customer's business, which means out of multiple segments of the business, by any customer, usually bank selects a particular segment of business and enters into a partnership, a shirka on that line of business, which is usually very stable, having history, a successful history, and then subsequently they agreed on a certain level of profit sharing. Now there is a detailed mechanism to it. I might have to skip because of the time, the operational details, I believe. So, key features of running Musharakah includes, it offers a Sharia-compliant alternative to running finance, and running Musharakah enables the customers to draw and deposit funds against a running Musharakah finance limit offered by bank. Payment by the client is done provisionally at the end of each quarter, maybe an yearly basis or half-yearly basis as they may agree on. Final settlement will be done after availability of annual audited accounts. And the reason for settling it on annual basis is that usually annual accounts are being audited. Quarterly accounts are not audited or reviewed, while half-yearly accounts are usually just reviewed, which is a limited scope review. So from that perspective, the final settlement is being done on the basis of annual audited accounts. As I mentioned, the facility limit is being calculated based on the average of inventory that the organization or the company is holding and the average of trade receivables that are there, to ensure that whatever limit that we have assigned to the customer is really the need of the customer, and the money that is being injected in that particular business is solely used for that purpose and not for any other purposes. There must be a limit to that. Subsequent to assigning a limit, we need to identify the cost of goods sold, which means we need to identify the overall cost. We need to identify the particular cost of goods sold, adjusting it with certain areas that excludes expenses which are indirect in nature and not directly related to that particular segment of business. Like maybe stores and spares, it can be consumed for various other segments as well, repairs and maintenance, etc. Similarly, this is, we have presented it in the form of a table whereby we have identified certain expenses that are being taken for Musharakah while the others are not. The third step is the calculation of total average Musharakah investment, whereby the adjusted cost of goods sold is being multiplied with the inventory turnover, and the tenure on which the Musharakah funds are being invested plus the adjusted cost of goods sold is multiplied with the average collection period. So we may come up with the total average Musharakah investment made by an Islamic bank. This is how you calculate. I'm not going into the details as to how to conclude or how to calculate the overall inventory, average inventory turnover or average collection period. This is the total average Musharakah investment, whereby we come up with the overall average investment that the bank has made in that particular segment of business of that company to arrive at the investment amount, the share of investment made by an Islamic bank. So once that is being done, bank and the customer have two different profit sharing ratios. One ratio for below the profit ceiling amount and the one for above that. It can be done because usually there are two aspects to it. Firstly, the customer is, and this is being allowed by Sharia standard as well, that you can have multiple profit sharing ratios at multiple level of profits. So at inception, you can come up with one single level of profit sharing, and subsequently, once the client develops a better level of understanding of Musharakah, they can agree on multiple level of profit sharing as well. The running Musharakah loss will always be shared as per the ratio of investment. This is the Sharia rule. Subsequently, the calculation, the sharing, the methodology for sharing of profit calculation is being done, that selling and distribution expenses related to the export or transportation of the goods will be subtracted from the gross profit to calculate Musharakah profit. Now, this is the important area, and that important area is, At inception, you need to simplify this whole detailed concept. This concept is quite similar to the profit calculation mechanism that is widely being used by Islamic banks on their liability side, whereby they use Mudarabah as a product at the pool level and they distribute it. While on asset side, when they use this profit sharing mechanism as they are entering into customers' business, whereby they usually do not have the pool management system or a specific identification methodology for any invested assets, then we need to identify a particular line of business, and based on that, we calculate the overall average investment, and based on that, we come up with the profit out of that segment at the gross profit level. Because at net profit level, usually segmentation wise, net profit calculation is more challenging as compared to at the gross profit level. So, more than one Islamic bank may enter into a running musharakah arrangement with the customer at the same time within the facility limit. If the customer is doing or accepting the funds on the basis of running musharakah with more than one customers, then we may enter into a challenge whereby a bank is into a segment of business and another bank comes into musharakah on the same line of business. If that is the case, the customer may enter into such running musharakah with any other Islamic bank, provided that customer should not have a cumulative limit more than the capacity of its business. So we need to ensure that whatever is the investment that the customer is bringing in, maybe in the form of another Islamic bank, it should not be more than the capacity of its business. We need to make sure that. From that, if they are bringing in, then they need to take, consent of the other partner as well before the first disbursement in each musharakah period. Business unit is required to take information from existing limits and outstanding of running musharakah customer with other Islamic banks as well, so as to be well aware of the factual situation of the investments being made by other Islamic financial institutions. In case the customer availed a running musharakah facility from multiple Islamic banks during the same musharakah period, and the combined musharakah investment of the Islamic bank exceeds the total average musharakah investment of the business, then the excess amount will be treated as qard, and the customer needs to give it back to those financial institutions with 0% return, because of course this will not be part of the musharakah investments. If financials are not submitted within the due time period, then of course they can have a deferral, and we need to engage the institutions required, the functions to make sure that exact financials are being provided by the customer to the bank, to make sure that actual profit is being not just calculated but distributed to the depositors accordingly. That's how this product is being used by Islamic banks, and from that perspective, I believe that it's quite challenging to explain this detailed and highly technical product in maybe 10 or 15 minutes at this point in time. I've tried to simplify it to the maximum possible manner, but still there must be a lot of questions, regarding assignment of various charges and expenses to the customers, how we can, share the profit at the gross profit level or the net profit level. But despite the fact, while keeping this concept and philosophy simple, if we do understand that, remember, corporate entities usually they do not have any religion. Of course, the people running those institutions, they abide by or follow certain religions. So from that perspective, when they enter into a business relation with Islamic banks, of course they try to compare the services and the products offering by Islamic banks as compared to their conventional counterparts. So from that perspective, what they have to do is, they have to offer certain Sharia compliant products that are not just Sharia compliant, but at the same time the customer can relate those products with the conventional products that have been used to, and subsequently, gradually, with the passage of time, by educating the customers and the related team, you can bring them up to a more closer or more better or distributed modes product. With this, inshallah, the floor will be open after a while for questions. Thank you so very much.
Thank you, Brother Muhammad, for really trying to put forward a very good case for discussion. Maybe we can always throw stones at any argument and try to find faults in it. Maybe the most important fault or challenge would be what Professor Najmuddin addressed in the beginning, which is ethics. Because if you want to have proper musharakah, you have to have proper ethics. Because if you have traders who's going to hide their profit from the bank, there is no way on earth that you can detect it. Maybe Professor Higazi agrees with me, especially with the mindset of business people nowadays. The idea is very good and very nice, but the problem is that you have to have the checks and balances that could make sure that the banks will not be taken for a ride. Because maybe Sudan has a classical example of musharakah cases which went down the tube because ethics were not there, because banks couldn't detect profitability, and because traders insisted on showing losses. And this is where the money at stake, which is your depositors' money, will be subject to risk that maybe no regulator would accept. Having said that, thank you very much. It was a very good presentation, and maybe it's worth discussion and worth taking it forward to avenues where it can be practically implemented in a way that could also secure proper adherence and being watertight in terms of traders who try to escape from showing their proper profitability. The last but not least presenter and speaker, it's the last session after lunch and last speaker. God be with you, Mr. Rafiuddin Sheikho, from CEO of Managing Director of Dinar Standard United States. I'm sure you still have jet lag, and this will add up to your jet lag. But I'm sure it will be energizing enough for the public, and it could stimulate questions. The floor is yours to address this important subject, and we probably can have some maybe 5 or 10 minutes afterwards for discussions and questions from the public. Thank you.
Thank you so much, Mr. Yad. Assalamu alaikum wa rahmatullahi wa barakatuh, everyone. Like I said, I have to make a special dua that hopefully we can end this session with in an engaging fashion. So you've certainly put a big challenge for me. Just a little bit of a background about my firm, Dinar Standard, which will set the context of our discussion that we've had so far. Dr. Najmuddin, really enjoyed your perspective on the anchoring of morality in achieving our topic of the discussion, which is social economic development through Islamic finance, right, or participation finance. And Muhammad, Mizan Bank, a pioneering and exemplary Islamic financial institution of a leading but yet developing country of the Islamic world or Islamic finance. Hearing the structural governance accounting practices very instructive, the challenges, and I've learned a lot myself already. So I'll bring a very different perspective to add to this conversation, which is Dinar Standard. We are a growth strategy advisory firm focused on the global Islamic economy. For over a decade now, we've been advising investment funds as well as sovereign wealth funds, government policy on how to leverage the opportunity of the Islamic economy to achieve economic development, and a big part of it is social economic development. So what I will add here is, what is that social economic development? That we are trying to govern better and address the challenges of accounting And Dr. Najmuddin, as you said, nothing without morality, right? How would we achieve social economic development through participation banking if the anchoring is not there? Mr. Iyad, you started by saying something very interesting, which is that participation banks, Islamic banks, if done well, done properly, done as it needed to be, itself will achieve social economic development. So, but we're not there, obviously. So let's look at the facts, and I want to ask all of you to just think about something. I'm not going to ask for answers. Mr. Yad, you mentioned today we have the SDGs, we have the ESGs. If I would say much as a buzzword, right? Mashallah, great to hear about the products that you actually have in place addressing. But when we look at the reality of the core global customer base of Islamic finance today, the 1.8 billion Muslims worldwide, right? And the Muslim majority countries that we're talking about, we are in a dire socio-economic pit. In most every sphere of those SDGs. Let's look at food insecurity. The 57 Muslim majority countries today have a net import deficit of $66 billion. And as Muslims, we consider ourselves foodies, and we have a very rich agriculture, with Pakistan, Turkey, Indonesia, etc. We have a very rich agriculture base. Yet we are net food importers and highly insecure when it comes to malnutrition in terms of the quality of food. When you look at health indicators, the OIC member countries are some of the worst proportionately. Our customer base of Islamic finance at $1.8 billion is the youngest population segment in the world, where joblessness remains to be high. We have poverty that is at a disproportionately higher level than other ecosystems. So the fact remains that there is a lot to do to achieve social economic development. And what I would submit is, I think when we look at the SDGs, it seems as though there is a gap between the ideals of Islamic finance, the product structure, the maqasid sharia, excellent structures that exist, and the gap of connecting with these actual socio-economic needs. Even today, when we talk about SDGs and ESGs, I think governance-wise, it's, in terms of impact level, there's a big gap in directly linking to the specific socio-economic needs in our target markets. As I mentioned, some of those areas. We look at, I just came, Mr. Yad, you said about jet lag. Actually, US to, I was in Jakarta 2 days ago at the Islamic Economic the Sharia Economic Forum. Ultra jet lag, indeed. And in Indonesia, we were talking about 60 plus million micro businesses. Micro businesses, not even small, so they have a breakdown, who are the driving engine of the economy. But however, access to finance, access to Islamic finance is a huge gap. And much would be the case in perhaps other member countries, Pakistan and so forth. So what are the solutions that, from an Islamic economy point of view or Islamic finance point of view, what is happening? Within the OIC member countries, as Islamic Development Bank and others, and ourselves have identified the industries in which OIC countries, our core target customers of Islamic banking, are strong in. And one of the unique segments that's emerging is this global halal industry. And I don't know if this is the first time, but an AOPI event that says sustainable, efficient, and resilient halal ecosystem for Muslim economies. So, and I know sessions yesterday touched upon this as well. Just to give you some numbers, today the global halal consumer market of food, pharma, cosmetics, and will include modest fashion as well as media and recreation, we have sized this to be over $2 trillion in consumer spending. This is a significant consumer market that enables the Muslim majority countries to elevate their socioeconomic status and perhaps the gap to be filled by supported by Islamic sustainable financing. This halal economy ecosystem today, the trade that happens is about $220 billion, this is as of last year, annually, in terms of the import and export of these products. Sadly, the top 7 exporters of halal products in the world are non-Muslim majority countries today. So this is another area that we're addressing in terms of focused attention to, moving from the generic SDGs, ESGs to targeting which problems to solve. And that, I believe, will also help the Islamic financial institutions to focus their products to them. So one of the areas we're seeing is the Islamic fintech or even the halal tech ecosystem that's emerging. To give you some examples, and many of you have heard of some of them, Ethis Ventures from Singapore covering Southeast Asia, or Wahed Invest from, they're now in Malaysia, Dubai, and elsewhere, as well as fintechs. Some of the things they're experiencing, for example, Wahed in Malaysia, is they're actually being able to see addressing the financial inclusion in rural areas of Malaysia that they didn't anticipate. So the role of fintechs in enabling financial inclusion, which would speak to the need for social economic development. Ethis Ventures is now utilizing participatory financing to fund renewable energy projects and agriculture ventures through P2P platforms. And that is obviously helping to develop sustainable infrastructure development. However, these ventures are facing governance issues. As we're seeing, a lot of the startups in this space can benefit from the incumbent financial institutions' experience in governance. There are challenges in reporting, financial reporting, accounting, that they need help and guidance in. There was a recent report by IFSB on the participation, peer-to-peer financing and equity crowdfunding that are providing Sharia-compliant funding to underserved sectors. However, they identified challenges, unique challenges, such as in managing risk of the Sharia non-compliance of these platforms or cross-border legal issues. So these are some of the specific channels through which social economic development is happening, but they are struggling with not having access to capital because there's SMEs. As we know, a lot of the Islamic financial institutions, their risk profile and risk appetite is low. So there is a gap if we really want to talk about social economic development and enabling these micro SMEs and halal ecosystem startups. They're high barrier to entry for financing. We talked about the financial reporting and accounting standard risks. Some of them are also dealing with operational vulnerabilities like cybersecurity threats and challenge of Sharia non-compliance, as I mentioned, disclosure requirements, AML protocols, so forth. So in conclusion, what I would say that while we are talking about the question of how to enable sustainable economic development through Islamic financial institutions, improving governance and accounting, and certainly those are areas that will enable its further development, it's important to focus on those channels of and drivers of social economic developments in the Islamic economies today to better suit and fit the financial products that can be delivered to them. Thank you very much.
Thank you very much. This has been very enlightening. You touched upon being the practical dimension of how to address those issues and to try to tap on areas where certain entities can be supported to make sure that social and economic development can be fostered. and the challenges that those entities can face. This is extremely important. Of course, you're trying to basically highlight what other entities we can benefit from, but believe it or not, banks should and are the most equipped organizations that can contribute. Will remain with I think the amount which was said around 4 trillion. What is the total of Islamic banking?
Assets under management,
Assets,
right, about
4 trillion, something like this. I think this is where the catch is. Those banks, maybe they find it more profitable to go for mega projects, to go for huge transactions, away from going into smaller tickets, because they are tedious, they are sometimes time consuming, and the return that comes out of them is negligible. I think maybe the mindset has to change here. You said you're trying basically to salute what we have done, but I'm telling you, those products which I was referring to are all profitable. You can always be socially and economically responsible and go for promotion of sustainability and yet make money, because I don't think there is any contradiction. There are multiple stakeholders whose interest has to be taken into consideration. Depositors are, owners of the organization are, borrowers are, and so on and so forth. So I think we have to establish some sort of strike a balance between all the stakeholders, so that each and every one of them, his interest is taken into consideration. To that, I think here the boss is telling me that we need to wrap up, but after your permission, maybe you can take one or two questions. One question, who is the lucky guy? Oh, Professor Higazi, thank you.
Assalamu alaikum. Assalamu alaikum. Okay, Dr. Mohammed Salim from University of Bahrain. First of all, Musharakah is one of the easiest form of business. Our speaker, he said that it will be distributed according to the agreed ratio, and losses will be according to the investment ratio. This applies, this is not Musharakah. Musharakah is both profits and losses will be according to the contribution of each participant to the equity capital. And, and about the Musharakah, we don't have to make that much complicated. It's easy, all right? It's very easy, and in Musharakah-based modes of financing, we should make it even with the fintech, that anyone who will participate will get through the what do you call, instantaneously informed that this much profit is made and so on. Always make the net profit. And another conception of the bank is, Allah subhanahu says, "Ahallallahu al-bay'u wa harrama riba." So bank is not the concept of bank. Bank personnel, they also should they're participants. And they should be in the field, not sitting in the office and doing this. No, they will be also in the fields with the participants. And as a result, there is no risk, because both participants, whether they're from a bank or from outside, they will participate, and there is no risk of losses or moral hazards or agency problems or any such things. So that can be minimized in this way. So they have to go outside the bank. They have to be working with the participants, partners, and so on. And Musharakah is one of the most important mode of financing that was practiced during the time of Prophet ﷺ. I think this concept will help this problem.
Thank you. I think it's more of a comment, but maybe you can...
Jazakallah khair for your comments. Let me clarify this thing. As far as profit sharing is concerned in the concept of Musharakah, let me refer to the AOPI Sharia standards. That should be the base of our discussion, whereby profit can be shared as per pre-agreed, mutually agreed ratio. But as far as loss is concerned, the loss should always be shared as per the ratio of investment, which is the concept of Musharakah, profit sharing. Anyhow, now, Coming to the simplicity of Musharakah, I've been associated with academia besides being part of the industry. So I can relate to the concept and the philosophy that exists in a research center or a classroom, whereby on paper this seems quite obvious that, we can agree on sharing the profit on a 50-50, 60-40, 70-30 ratio. But when you enters into a real practical life, now let me tell you a practical case whereby, due to shortage of time, I'll be summarizing it. Just on the liability side, whereby you have not many products, maybe 8 to 10 liability side products, but even then, and the total type of assets that you tag with those liabilities, usually they are just of 3 main kinds and sub-kinds. Even in this simple segment of the overall bank, still the global Islamic banking industry is facing a challenge for an ideal software to manage these pool management and asset tagging issues. The globally, it's not just one country or 2 countries. So now, holistically for an organization, having just these few, maybe multiple of dozens of products mapping with each other and sharing profits out of it is a big challenge. And then when we talk about entering into a pure musharakah, which should be the case, calculating their each segment of the business, having thousands and thousands of clients on the asset side, and assuming that it is very easy to calculate profit out of it can be a wish, but practically it's a huge challenge. Let me tell you this thing as a practitioner. It's a huge challenge. But having said this, I personally feel that is the reason why I initiate my discussion and presentation with the words that you need to have conducive environment, which is a system whereby you do not have multiple books of account. One is for the tax authorities, the other one is for the owner, the third one is for the bankers. You need to have one single books of account properly reflecting the actual business. So from that perspective, as mentioned by Honorable Professor, the ethics needs to be built in by not just bankers, but by the business community as well. So overall in the society, if you have that conducive environment, obviously, inshallah, it will be very easy to enter into musharakah.
Excuse me, after your permission, I want to give the floor for one word from Professor Higazi, because there was a mix-up.
Assalamu alaikum. Thank you very much for giving me this opportunity. I know this is probably the last comment. I want to connect your very informative and useful panel to yesterday's comments from Brother Khalid, who gave us a very disturbing, I forgot the last name, but it was a very useful presentation about the wealth of Muslims. I mean, we make 25% of the world. We have about 28% or 25% of the wealth of the world, which means if we have the poorest countries in the world, if we have the most challenging economic problems in the world, that means actually something is wrong, right? Because we should only have 25% of the problems of the world. We should have 25% of the poor populations in the world. So that means we have a wealth distribution problem. We have access to finance and access to credit or financial inclusion problems, more than what the conventional world has. And we should recognize they also have. They have challenges in community banking, in financial inclusion, but not at the same rates that we are having. I think we need to do more research and studies in this area. As Professor Najmuddin has pointed out, moral hazards and moralities, these are not unique to Muslim societies, right? We're not unique. If you have proper regulation, proper hisbah, you can reduce, and if you apply also the theories that have been introduced by theorists and academicians regarding moral hazards like peer pressure and other useful instruments and tools, we can get there. But I think we need to discuss this. We should have a whole conference just about this issue. How come we only have 25%, we represent 25% of the wealth of the world, but we have the biggest economic problems with the world, despite having Islamic finance for more than 50 years?
Can just respond to that quick? Okay, all right.
If maybe he wants to say a word.
I will put this as a challenge to actually AOPI, Dr. Hijazi, and link it to the point about morality and ethics. You know, this is actually not rocket science. You know, we don't need to bang our head to come up with an answer. No. This gets to prioritization. It's very evident in terms of the risk profile of financial institutions that we're not lending to the our risk profile is very conservative, right? So the question to standard setting bodies like AOPI is, there's an equivalent movement in the West called, I don't know if some of you may have heard of B Corp, whereby every organization that is committing to sustainable economic impact within their bylaws, they're stakeholder maximization, not profit. And I think that mindset institutionalized towards this, because that's the missing piece, I would submit.
Thank you very much. We are hopeful that we were light and we could create certain discussion. Thank you very much for your patience with us, and we hope that this has been useful. Thank you, and see you later, inshallah.
Thank you very much to the esteemed panel. Thank you very much, the chair of the panel. That was a very, very enlightening session indeed, and it could not have ended with a very healthy Q&A. Thank you very much for a very healthy Q&A, both of you gentlemen, and a very powerful, lasting remark, my brother. I mean, focusing on a stakeholder maximization rather than profit maximization. That's amazing. It was a worthy ending to this session, is what I can say for the least. So thank you very much to all the esteemed learned panelists, Farhan, Najmuddin, our brothers, the chairman. Thank you so very much. And may we have a group photo. A round of applause to our panelists for giving us a very, very healthy discussion on the stage. Gentlemen, thank you again, and we are honored to have you and listen to your experience and thought process. This is it. This is it, ladies and gentlemen. Thank you very much to all the panelists yet again, and the chair of the panel. If I could request the learned panelists and the chair to take your seats so that we can begin the closing of our conference. All right, this is it. We are now at that time of the day where we have to wrap up the whole proceedings. And as we draw this second day of the AOPI Islamic Development Bank 19th Annual Conference of Islamic Finance to the close, I, and on behalf of whole AOPI and all the co-hosts, the Islamic Development Bank, the Central Bank of Bahrain, all of us, I would like to take a moment to reflect on the remarkable journey that we have shared over the last 2 days. Ladies and gentlemen, as has been a testimony to all the AOPI initiatives, including this conference itself was able to gather a physical presence, mass presence of over 700 participants from over 30 countries. Over 900 witnessed this conference live through online participation. We had the pleasure of listening to over 40 speakers with their array of experience sharing, array of thought process sharing, and regaling us over the period of last 2 days. The conference was further enhanced and created by the presence of none other than His Excellency, the Honorable Rais, President of Republic of Tatarstan, the Honorable Mr. Rustam Minikhanov, and the whole delegation, further enhancing the value of our proceedings and our event. To all our partners, 16 in total, who supported us in enabling what we have achieved over the last 2 days, to all our staff, assistants, and all people who are involved at the back end and at the front end, who you see, who you do not see, thank you to all of you. And of course, what we have learned so far over the last 2 days, it cannot be said much more what the way the last session ended on a very, very instrumental note. Ladies and gentlemen, over the last 2 days, we have shared and covered a lot of ground under the theme of the conference to establish, develop, understand, and further the Islamic finance and leverage it further, not only for the current, but the futures of our generations and our nations. The most fabulous speakers coming from over 15 countries shared their expertise and vision for the future regarding leveraging Islamic finance to build a sustainable, efficient, resilient, and halal ecosystem for Muslim economies in particular. The discussions have been rich and thought-provoking, covering a wide range of important topics from regulatory frameworks to innovative perspectives, fintech, accounting challenges, convergence of Islamic bank sustainability, and so on and so forth that specifically aligns with the Sharia principle. I want to express my gratitude to our honorable speakers, panelists, participants, to His Excellency Dr. Samir Soelem, to His Excellency Dr. Noor Ahmed Agha, the acting governor of the the Afghanistan Bank of Islamic Emirates of Afghanistan, to all of you for their valuable contributions. Your passion and commitment have sparked meaningful conversation that will undoubtedly shape the future of Islamic finance even better and more prosperous. Of course, we cannot miss the AOPI graduates. To our graduates who received the honor of finishing the AOPI Certified Sharia Advisor and Auditor and the AOPI Islamic Professional Accountant accolades, to our graduates, as you move forward, remember that you carry with you the knowledge and values that will guide your contributions to important fields. Being AOPI qualified enhances your not only skill level, but also the responsibility towards the industry. We are excited to welcome you on board, and we are excited to see how you'll shape the future of Islamic finance even further and better. Last but not the least, all I can say that over the period of last 2 days, the efforts, the outcomes, it is suffice to say that together we can foster growth, promotion, innovation in Islamic finance in a way that not only allows us for a sustainable financial solution and financial infrastructure and financial commitments towards our economies and our generations, but for Islamic finance to continue to flourish across the globe. With that closing remarks, ladies and gentlemen, I thank you so very much on behalf of AOPI and ISDB, and I look forward to seeing you for even better, even greater, and even nobler conference, the 20th annual AOPI Islamic Development Bank Islamic Finance Conference. Thank you so very much. May Allah bless you, and thank you for all the support.